We used to get strong economic data. We used to get strong economic data, and we go, well, yeah, the market's going to go down. Fed's got to go even further than they thought. So yesterday we get weak economic data with retail sales. Looks like some of the higher rates might be having an effect, a desired effect, and that's also a reason to sell stocks. We're just not in a good place.
No, we're not in a good place, and I think we sold off really because the dot plot's at 5.1%, not a surprise, but I think after the CPI number that was a little bit better than expected in 2 months in a row of better than expected inflation data, people thought dot plots might not be at 5.1, maybe more like 4.7, 4.8. It doesn't really matter. Rates are going to stay higher for longer. He told us that. Powell told us that at Jackson Hole. So we have to just live with it. I would just simply step back for a minute, though, and just say that it's not all gloom and doom. There is momentum in this economy right now. We are certainly not in a recession right now, even though we did get a bad retail sales number yesterday. I get that. But we have better jobs. We have higher wages. We have input costs that are coming down. Gasoline prices were down 13% last month alone. One of the reasons why the University of Michigan sentiment data came in better than expected. So we're starting at a place that's a little bit better, a little bit stronger than where most people thought. We are going to slow down in 2023. Whether it's a recession, whether it's not a recession, remains the question, and how long if we are in a recession. But I do believe that we are pricing in a lot of bad news, Joe. We are down 18% in the S&P 500. We're down 30% in the NASDAQ alone. So I think it's time to start to nibble a bit, and that's what I've been doing.
We used to watch triple witching. We used to talk about it all the time. We haven't much recently. We're talking about it again today because there's quite a few options expiring. I don't remember really the last time it caused a significant move because of position squaring or whatever the unwinding has done in the past. We haven't really talked about it. Is there a possibility for something today that could surprise us in terms of the effect and how deep it could be? I mean, could we have a big sell-off based on options expiration today?
I mean, it's entirely possible. I think it's an excuse because people are nervous, right? I mean, how many people come on TV and they're talking about all this gloom and doom? And so this certainly could be an ugly day. But I think you have to just take a little bit longer term perspective and look at your favorite best-in-class blue chip companies, strong balance sheets, good dividends, good free cash flow. And use it as an opportunity. I know it doesn't feel very good right now. It doesn't feel very good for me either. Everything that I bought in the last couple of weeks is down. However, I do think in the long term, a year from now, we're going to feel better. At some point, the Fed is going to pivot. We're not even close to the Fed pivoting, but at some point they will. And when they do, that's when I think the market's going to skyrocket.
Which stock you're adding to some new positions or adding to some old positions like what?
Yeah, so new position, D.R. Horton, and that's really a function of the 30-year being down 21% from its high. But this is a best-in-class operator in terms of margins, in terms of ROE. You've had 13 years of underproduction in the industry. So, yes, I know supplies are on the way higher, but I do think that you can see an extended cycle. Stock trades at 9 times earnings. IBM we've talked about. It's actually been one of the best technology companies year to date. And if you look back at earnings season, they were one of very few that actually beat and raised. And it's because they're just becoming a much more simpler company, right? Software and consulting now is 75% of total revenues. And that's better. That's better for recurring revenues and margins. And I will say this. I think the theme for first quarter and second quarter of next year, currency. Currency hit them 8% in the quarter. I think every multinational company is going to see a little bit better on the currency front because you've had the dollar fall 9% from its highs. And then lastly, J&J. I like it. I've always liked it for a really long time. Pharmaceutical company, really good, well-run, above-trend growth. Med tech as well, really strong. And they're spinning out their consumer business. So you actually have a catalyst and very strong balance sheet. And they've been raising their dividend, or they have had a dividend and either raising it or just maintaining it for 50 years.